Hey guys, we're going to be talking about Nike today. So this is from Morningstar. So first, I'm going to kind of look over business strategy and outlook. So they view Nike as a leader of athletic apparel market and believe it will recover from its recent problems, such as the lack of product innovation, soft demand for sportswear, and strained relationships with wholesale accounts. And what they're kind of talking about there is in the past couple of years, Nike has really kind of gone away from the brick and mortar stores and they've been pulling their product or just not releasing much of their product to stores like stores such as like Finish Line, Foot Locker, those kind of stores, and they've really been focused on e-commerce online sales only. That way, they don't have to have a middleman. That way, they don't have to split the profits with anyone. And what it's really actually done is actually really hurt Nike quite a bit. And with the new CEO that is coming in, he is actually wanting to go back to that old relationship. He wants it so that way Nike's back in the stores again. Because let's face it, I mean, that's probably going to be the route in the future, but it's not here yet. People want to go to the store, they want to go to the mall, they want to look at the shoes in person before they buy. They might want to try them on too. And other companies have been kind of swooping in and really taking over in that market. And next, we're going to go over Nike is the largest athletic footwear brand in all major categories and in most markets. While it does face significant competition, we believe it has proven over a long period that it can maintain share and pricing. Nike has a renewed focus on its key partners, its products and connections to international athletics under new CEO Elliot Hill. And this is what I was talking about. So they have a new CEO. Elliot Hill used to be a CEO and he retired and he actually came back. Uh, they personally, I don't think he should have ever left, but I mean, I get it. He wanted to retire. He built a great company. However, the new CEO that was there, he was not doing a great job. I mean, it's Nike's just not there. They're not, and that's not what the customers want either. And then they're also talking about, although its recovery in China has been slow due to economic conditions, native competition, and a political controversy, we still believe Nike has a great opportunity for revenue growth, and there are other emerging markets. The firm experienced double digit annual sales growth in 6 of the past 9 fiscal years in Greater China, and fueled by high government investment in athletics. We think it will do so again after the current difficulties have passed. Moreover, with the worldwide distribution and a huge direct-to-consumer operation has brought 21.5 billion to Nike brand digital sales in fiscal 2024. The firm should benefit as more people in China, Latin America, and other developing regions move into the middle class and gain broadband access. And then here is kind of what the bulls are saying. So the bulls are saying, although uneven of late, the global sportswear market should expand, especially in Asia and other developing areas. As a share leader in most countries, Nike is positioned to benefit. Nike recently brought back lifelong executive Elliot Hill to serve as CEO. Given this company's knowledge and relationship with key partners, we're confident in its ability to improve Nike results. And that is something I'm also confident in. I believe Nike stock is a great buy here, especially with its stock price right now. I believe it's a great dividend play, and I don't think Nike is going anywhere anytime soon. Although depressed of late, Nike's EBT EBTI margin should return to mid-teens levels as increased full prices. And then this is kind of what it's showing in this graph right here. So we have Nike. Nike is fair value. What they're saying is actually $112 right now. It's at 76 as of last close. Next, they're talking about Under Armour. Under Armour is at $8.35. They're saying the fair value is 14.50. Next is Lululemon. Lululemon, they're saying fair value is 315, last close of 414. So that's showing that it actually might be a little expensive for Lululemon. And then lastly is Adidas. So Adidas, they're saying the fair value is 180, and right now it's at 254. So you're kind of noticing some stocks are undervalued and some stocks might be considered overvalued. And it goes over some key metrics down below. So how it's going into PE, looking at the PE ratios, the market caps, and so forth. And then next, we're going to look at what are the bears saying. These are what the bears saying. Nike has a period of time to economic issues in key regions and its own mistakes. Given the depths of its problem, the timing of a turnaround is uncertain. The Chinese sportwear market is increasingly competitive. And that is true. I mean, brands like Lululemon have expanded tremendously and they're taking over market share for sure. And the last one, but not least, is Nike's dominance in running shoes has been challenged by success of relative newcomers like Hoka and On. It has fallen behind some others on innovation. And these are what the bears are saying as far as what Nike's looking at. And then lastly, I want to kind of go over here. So, we all know that Nike and Jordan are combined. And then this is what I thought was pretty interesting. When we look at the fair value, I do think Nike is definitely undervalued as of right now. So, Nike right here. We are lowering our fair value estimate on Nike shares to 112 from 117. The company's fiscal 2025 second quarter sales fell 8% as Nike's pulling back on overexposed shoes to make room for more innovative products to be more competitive. We think it'll be more successful in the effort, but new CEO Elliot Hill has much work to do to improve relationships with wholesale partners and increase full price selling in Nike's company owned digital channels, which have been used for clearance. Due to planned inventory and reduction in discounting, near-term results are expected to be weak. Thus, the fiscal 2025, we have slashed our prices forecast to 10% decline from a 7% drop previously. Our EPS forecast to 205 from 277 further anticipate only a partial recovery in fiscal 2026, projecting EPS of $2.43 on 2% sales growth. Most likely, the full impact of Nike's turnaround innovatives will not be apparent until fiscal 2027. So, what that is saying, we could have a rough year ahead of us for 2025. Um, and they're also saying it might not be a good turnaround play until 2027, which is a couple of years. And personally, for me, guys, I do think, especially for the first half of 2025, it's still going to remain a little rough for Nike. However, I'm not getting in and out of a stock just like that. When I invest in something, I'm investing in it for the long term. I believe in the future. I don't want to just make 10, 20%. I want to almost double my money, and I believe Nike is going to do that. So if it takes a couple of years, it takes a couple of years. I am totally fine with that, and I'll collect dividends along the way. So if you guys have any questions, just let me know, and thank you guys so much for listening.